Hey guys, this is the King of Homes, Stephen King with Realty Connect USA, and this video is specifically for my first-time home buyers. I'm going to be showing you minor tweaks that you can use when purchasing a home to take your monthly payment from this all the way down to this. And we're going to start by breaking down a mortgage payment so you can understand how these tweaks make such a big impact. Now, every mortgage payment breaks down into three parts. You have your principal and interest, your property taxes, and lastly, your insurances. And this is a loose estimate of what you might pay per month in principal and interest on a 30-year fixed conventional mortgage. And depending on some factors, this numbers can change a little bit. But for this example, we're going to say it's going to cost you $4.50 per month for every $1,000 that you borrow. And this is based off of a $300,000 loan. So that's going to bring you to $1,350 a month just in principal and interest.
Next, you have your property taxes, and here on Long Island, property taxes can fluctuate a lot. And if a property has $12,000 a year in taxes, that's going to create a $1,000 a month expense as compared to another property with $7,500 a year in taxes that will create a $625 a month expense. And being conscious of this detail right here alone is the first tweak to keeping your mortgage payment lower. Just by focusing on finding a property with lower taxes, you can bring your payment from $26.20 a month to $22.45 per month. Now next, down here, you have your insurances, which will bring me to my second and final tweak for this video. Now I use $120 per month as your expense for homeowners insurance. And if you're being quoted more than this, then you may be in a flood zone, or it may be time to get quotes from another insurance agent. And in that case, let me know, and I'll put you in touch with my guy Joe, who is the best around. So traditionally, when a buyer does not put down 20% or more as their down payment, they pay what is called PMI, or private mortgage insurance, which is roughly an additional $150 extra on your mortgage, sometimes more. So 90% of the first-time home buyers that I come across do not have 20% to put down. And this is where having the right financing hookup comes into play. So I work with the best first-time home buying bank on the island for those that qualify, and they allow my clients the option to put down 3 to 5% without having to pay PMI. And not only that, but their interest rate is aggressively lower than market value, and this typically creates an extra $150 a month saving for my clients, which brings their principal and interest from $1,350 down to $1,250 per month. And this is all for a 30-year fixed conventional loan. And by the way, if you don't know the difference between conventional Sony Mae, FHA, VA loans, make sure to check out our other videos where I break it down for you. And last but not least, the bank closing costs on this loan are only $100. So this financing is my second tweak for how my first-time home buyers are saving anywhere from $250 to $300 per month on their mortgage, while only putting 3 to 5% down. So now this tweak, the financing tweak alone, takes this payment down to this, and when combined with finding a property with lower taxes, your mortgage goes from this to this. So guys, it's very important that every single first-time home buyer out there finds out if they qualify for this type of financing or something similar. And it's also important to be conscious of what you're paying in property taxes, because as you can see, when combined, it makes a huge difference. So I am the King of Homes, and get in touch to find out if I can save you any money.